Good evening, good evening. Welcome, welcome to my live hangout. And today I'm going to be talking about a smart overview presentation that I want to introduce to you guys. Um, Today is February 17th, 2019. And as you know, tax season is right upon us. So, with that being said, I just wanted to share these little bits of information. It's about a half an hour, and I'm going to be sharing my screen with you so you can get a better idea and a picture. Now, the presenter that I'm going to be sharing with you, he goes by the name of Ivy Stokes. He's a very influential entrepreneur, and he's a co-founder of My Econ, and he's the vice president of marketing. So, allow me to share my screen with you. But before I do that, I just want to give you some insight on how I started investing in my business and myself. What I did was back in 2011 and 12, I was going through theology school. So I was studying the ministry, and I learned that tithing goes uh, different ways when you're doing a 501c3 corporation or a organization, which is a nonprofit organization. And you see, like today, uh, I have about $800 here. So what I do with that, with this cash, is I took I paid myself 10% of this. Instead of throwing 10% in investments, I pay myself 10%, which will be here, $80. And I'll take this money and I will invest this money and pay myself this money because, you know, I need my business to fluctuate more than my pockets. You understand? So, yeah, I just wanted to show you that real quick, and thank you for watching. And on to the show. And this is going to be about a half an hour long. So, in between the scenarios, there's going to be three scenarios. As far as doing your Schedule C taxes on your 1040, based on employee and two other business scenarios where you can utilize this system to put more money in your pocket and actually learn how you can put money other in other areas, but also gain from it as a business. Okay, so allow me to um, screen share my presentation, and I'm going to give it up to Ivy Stokes. Thank you.
Hello, my econ associates. This is Ivy, and I hope you're having a wonderful day wherever you are. And we're ready to go to work again. All right, we're working our way through the MyEcon training manual. And of course, we are covering the minimizing taxes strategy and the four additional subtopics that's in there, which were the W4, the three Schedule C examples, the tax training, and the tax advantage investment. So in this particular subtopic, we're talking about the three Schedule C scenarios. Here's what's important about that. I When we talk to people about joining MyEcon as a business, we talk to people about the tax advantages of a home-based business. Sometimes that's misunderstood because some people think you just sign up in a business and you automatically get deductions. You don't have to do anything, and you save $5,000 to $10,000 a year on your taxes, and that's not totally true. So what we want to do is give you a written example of three individuals and how their taxes are affected at the end of the year by having a business and by not having a business, and based upon how much money they make in the business. So let's get started. The first scenario we have is a person that's an employee that's making $75,000 a year. We've got a husband, a wife, and one child in the household, and they do not have a business of any kind. Now, as a reference in this particular section on this subject, we're going to use the 1040, okay? So if you look at the regular 1040 tax form, which everybody fills out for their taxes every year, it's based upon sections. The first section, of course, is the personal information, then the filing status, that's single, married, filing separate, or married filing joint, etc. In this example, the person is married filing joint. And then exemptions. Everybody gets an exemption for each person that's in their household. This particular family has three because the husband, the wife, and the one child, okay? Then you've got the income section, okay? So in terms of income, all W-2 income goes on line 7. Then you've got taxable interest, tax-exempt interest, ordinary dividends, taxable refunds. I'm not going to read the whole list, but basically lines 7 through 21 is any other types of additional incomes that you may have or deductions from incomes, okay? So this person has no business. You can look at the other things on the list. So bottom line, what they make on line 7 is carried over to line 22, which gives them their total income. This is the income that their taxes will be based upon before they get any additional deductions. Line 23 through 36 is adjustments to income. They had none of that. So we go to line 37, and they have the same $75,000 in income. Then we go to the second page of the 1040 that starts with line 38, which is a carryover from line 37. Then we go to line 40. That's where you have itemized deductions or standard deductions. You've heard me say before that the government exempts X numbers of dollars from everybody's annual earnings in terms of taxes. So last year, if you were married filing joint, then the first $11,900 you earned was exempt from taxes. If you were single, that number was $5,950. And of course, if you were head of household, that number was $8,700. So the bottom line in this example, we're using married filing joint. So the exemption is $11,900. Then on line 41, that number, that exemption is subtracted from their regular income, which was $75,000. So now their taxable income goes to $63,100 after the standard deduction or standard exemption, okay? Then they have an exemption for each person in the household. There's 3, the husband and wife, and 1 child. And that number, of course, was $3,800 for each person. So times 3 would give the family $11,400 in exemptions, more money being exempted from their taxable income. So their taxable income was down from $75,000 to $63,100. Now we subtract on line 42, $11,400. That's the $3,800 exemption for each person in the household. So that lowers their taxable income to $51,700. Their income tax would be figured on that, okay? State and federal. Okay. Now they may get some things like child credit or, IRA deductions, things of that nature. But in terms of their taxes and anything that can be done of how a business would affect it, it's all those things are line 43 and above. So on line 44, they will figure their taxes, okay? So their taxes will be based on $51,700. So that's a person or a family that's making $75,000 and they do not have a business. So now we're going to go to the next scenario where a family that makes the same $75,000 and they have a business.
Okay, so this would be scenario number 2.
All right, guys and ladies, we're ready to go to our second scenario in the schedule season. This example, this family they still have 3 people in the household, husband and wife and 1 child. They still make $75,000 a year, but this time they have a home-based business. Okay, so let's go to 1040 line 7. We see the same $75,000, but then we look down now because we have another income stream, a business on line 12. We see that the family has a $15,000 loss. Okay, so let's move forward to the Schedule C because on line 12 it says business income or loss, attached Schedule C or CEZ. So let's go to the Schedule C and let's see where that 15,000 loss comes from. So we flip over, we're in section 1 and we're going to page 15. This is the Schedule C, the profit or loss statement, okay? Now, the Schedule C is the form that your tax preparer will use at the end of the year to file all of your business income and business expenses to come up with a profit or loss. Now, you don't have to be able to fill this form out. We're not trying to teach you how to fill the form out, but I want you to understand the process so you'll feel comfortable in doing it yourself. Plus, you'll be able to explain it to other people. Now, the profit and loss statement at the top of this form. So obviously the government's comfortable with a person making a profit or loss in their business because the top of the form says profit or loss, okay? All right, so line A through J is personal information. We're not, that information on yourself, so we'll move forward. Let's go to part 1. It says income. This is where you put your income. So on line 1, it says gross receipts or sales. So in this example, this person actually made $5,000 in their business. Line 2 says returns or allowances. They had none. So line 3, subtract 2 from 1. So we still have $5,000 of gross income on line 3. Line 4 says cost of goods. Cost of goods is when you're buying products or buying ingredients that you're going to make products and services. In my econ, you don't have to worry about that because the customers buy online, so you don't really have a cost of goods, okay? Now, so line 5 says subtract 4 from 3, so you didn't have a cost of goods, so line 5 would still be the same $5,000. And you don't have any other income, so line 7 is also 5. So our total income for the business was actually $5,000. So if you were in my econ, you would receive a 1099 at the end of the year stating that you earned, my econ paid you $5,000. Now, then we go to part 2, expenses. This is where you put your expenses for the business. You won't physically do it. You'll turn this into your tax preparer after you have kept your records on your cash flow manager. And your tax preparer will fill out the software and it will populate this Schedule C form, okay? Now, under expenses, I use several standard, or not standard, but I use several very common expenses for people that are in network marketing or home-based business, okay? So line 9, we've got car and truck expenses. So if we were in that example, we're using $8,000. So if that was mileage, so mileage is about 56 cents a mile for 2013. So you can see that's less than 16,000 miles. Okay. So, typical mileage that someone drives their vehicle. Then we've got line 13, depreciation. Anytime you have equipment that you use more than 1 year, cell phones, pads, computers, any type of equipment that you use multiple years, you can take a percentage of the actual cost each year. So in this example, we use $1,000. It could even be a desk that you bought for your office or any type of equipment. Okay, so we use $1,000 on line 13. Then we go to line 16, interest. Okay, we got mortgage. That would be like if you're paying mortgage on a building that you're buying for your business. But then we've got other, which is B, 16B. Okay, that would be like interest on a vehicle that you use in your business. So you got a vehicle, you're paying notes on it. At the end of the year, your finance company sends you a statement of 1098 saying that you paid X amount of interest. Okay, so we got $2,000 for interest that you paid on a vehicle, or maybe you financed a computer or some other equipment for your business. So that's your interest. Okay, then we got line 24, travel, meals, and entertainment. We got $2,000. Okay, and the deductible amount of the travel, meals, and entertainment be $1,000. Utilities, that's your cell phone, your internet access. Okay, things like that. We got $1,000. Then we got wages. So if you paid your children to help you in the business, okay, or paid a child to help you in the business, you got $5,000 in wages. Or maybe you split commissions with another associate in the company, or maybe you paid someone referral fees, okay? That would be wages or commissions that you paid them. You would send them a 1099. So we got $5,000 on that. So the bottom line is we add up lines 8 through line 27, and we've got $20,000 worth of expenses, okay? Now, here's the good part about this. Some of these things that we're counting as expenses, we were going to pay for anyway. In other words, you were going to pay for your vehicle anyway. You were going to pay for your cell phone anyway. You were going to pay for your internet access anyway. Now, you're not deducting all of it, but you're deducting part of the cost because now you're using something that you were going to pay for anyway for personal use, but you're using it for personal and business, so it becomes partially tax deductible. Your job is not to decide how much. Your job is to keep good tax records and turn this into your tax professional at the end of the year, and they'll help you fill out this form correctly. Now, line 29 says tentative profit or loss. Subtract line 28 from line 7. Of course, 28 was the $20,000 in business expenses. Line 7 was the $5,000 you earned in the business. So on line 31, you have a $15,000 loss in the business. And that tells us to take that loss to line 12, okay? You can read that if you look down on line 32. So let's go over back to the 1040, and let's take a look at line 12. So on the 1040, of course, which is section 1, page 13, we have a $15,000 loss. So we go down to line 22, and it says combined amounts in the far right column for lines 7 through 21. This is your total income. So you can see now we had $75,000 on line 7. We had $15,000 loss on line 12, which gave us a $60,000 total income on line 22. Now, remember, when we was doing it on the person that did not have a business, line 7 and line 22 was the same. But remember, the company paid us $5,000, so we have some extra cash. So let's be smart now. Let's take that cash and use it to build our retirement, because we got to build financial success and get a tax deduction from the government simultaneously. So we go down to line 28, and we put the $5,000 into a tax deductible account for business people. Or if you're not maxing out your 401k or your 403b on your job or your IRA, you can simply put it there. But the bottom line, you invest $5,000 in a tax deductible retirement account. So now you add that up, which gives you an additional $5,000 on line 36, and you subtract that from line 22, and line 37 becomes $55,000. So even though we made $5,000 more, we lowered our taxable income by $20,000 from line 7 through line 37. So let's go look real quick at the second page of the 1040. So, of course, line 38 is just a carryover from 37, 55,000. We get the same standard deduction, 11,900, which lowers our taxable income on line 41 to $43,100. We get the same exemptions of $3,800 each, which is $11,400 total for the 3 people in the household, and our taxable income goes to $31,700. When we didn't have a business, we made less money, and our taxable income was $51,700. So it doesn't take a rocket science to see that if your taxable income on line 43 is 51.7 when you only made 75,000, or if it's 31,700 when you actually made 75,000 on your job and you made additional 5,000 in the business, the home-based business benefited you tremendously, didn't it? Okay, you see, that's the idea. Now we've got one more scenario where we can show you even more about the tax advantages of a home-based business. So let's go to the next scenario right now.
All right, here goes scenario number 3.
All right, guys and ladies, let's go to the third Schedule C in the 3 Schedule C scenario. It's getting more exciting with each scenario. I think you would agree with that. All right, we've seen the information on the first 2, so this particular Schedule C scenario should move along very quickly. Now, we go back to the 1040. In this example, we have a regular family, husband and wife, and 1 child is making $75,000, but this time they've got a home-based business. So we go to line 7 on the 1040, and they made $75,000. But line 12 says this family has a $20,000 profit in their business, okay, on line 12. So once again, we got to go to the Schedule to see what the $20,000 on line 12 actually means, okay? So we're going to go to section 1, page 19, okay? Now, it takes a little explanation here this time. So you know, line A through J, that's personal information. Part 1, business income, we've got $40,000 in business income. In the prior scenario, that was $5,000. But here, they made $40,000. So line 7, of course, is $40,000. Now, we take the exact same deductions in the business. That's probably conservative because typically if you made more money, you would have more business deductions. But we use the same deductions. For car and truck, we use $8,000, depreciation $1,000, interest $2,000, travel, meals, and entertainment is $2,000. The deductible amount is $1,000. Utilities, which is the cell phone, internet access, of course, is $1,000, and wages is $5,000. Add all that up, and we've got $20,000 in business expenses, just like we had in the prior scenario. So once again, on line 29, we're going to subtract the expenses of $20,000 from the income on line 7. So we've got a $20,000 profit on line 31. And of course, that tells us to take that to the schedule, to the 1040, line 12, okay? So the bottom line is you now understand where we got the information on Schedule C. So the family didn't earn $20,000 in the business. They were paid $40,000. Now, so let's go back to the 1040. When we go back to the 1040, now, of course, we're going to add the information from line 7 through 21. So line 22 becomes $95,000. So the family made $75,000 from their job and $20,000 from the business, even though they were paid $40,000. The taxable amount was $20,000. So they got a $95,000 taxable income or total income. But remember, the family earned $40,000. They were paid $40,000. Let's take some of that money and let's build our financial future. Let's take $20,000 of the 40 and invest it. So we put $20,000 in tax deductible investments. You've got many options. IRA, you can maximize your 401k, you can put it into a simple, a SEP. You got many options that you can do that. We're not trying to get into how to do it in this example. We're just telling you that that's what you should do or could do in this scenario. So that $20,000 on line 28, that's going to be subtracted from line 22. So the taxable income goes back to $75,000, which was the same amount of money that the taxable income was when the person had no business at all. Okay? Now think about it. The family made $40,000 extra cash in hand. But because of $20,000 in business deductions and $20,000 in tax deductible retirement investments on line 28, the taxable income is back to $75,000. Okay? Now, so let's go to page 2 of the 1040. So line 38 is a carryover from line 37, the same $75,000. We do the exact same process on line 40. The standard deduction, of course, is $11,900. So that lowered the income on line 41 to $63,100. Then we get an exemption for each person in the household, which is $3,800 each. So that's an additional $11,400 in exemptions subtracted from line 41. So the taxable income went to $51,700. The exact same taxable income that the family had when they had no home-based business. So this family earned $40,000 tax-free. Now, folks, that's the difference. So when someone talks to you about the tax advantages of a home-based business, or when you're talking to someone about the tax advantages of a home-based business, I hope you will emphasize that the more you make in the business, the more options you have to improve your finances, and the faster it's going to help you get to your financial goals, okay? So the last thing I want to do is take just a couple of minutes and do a commentary on the tax advantages of a home-based business and the 3 Schedule C scenarios.
Okay, guys, here's the recap and the commentary.
All right, guys and ladies, let's finish up with a commentary on the 3 Schedule C scenarios. Because remember, we talk all the time about attaining personal financial success. And of course, that's simply having enough cash flow to support your lifestyle during your working years and during your retirement years. And the money during your retirement years has got to come from investments and assets. So if you're not investing, you're not even on the right road. So let's compare these 3 scenarios so we can get you on the road to financial success. The first scenario was an employee that had no home-based business. They made $75,000, and after the basic deductions, the standard deduction of $11,900 and exemptions for the 3 people in the household, their taxable income went to $51,700. So if they paid 25% in taxes, okay, then of course their taxes would be $12,925. Okay, so if the employer took more than $12,925 out of their paycheck during the year, they would get a refund. If they took out less than that, then this family would owe taxes at the end of the year. Second scenario, we've got an employee who has a home based business. In this scenario, they made the same $75,000. Okay. They have the same exemptions, the same standard deduction, but they also made $5,000 in the business. But in making the 5,000 in business, they created $20,000 in tax deductions by using things that they were going to pay for anyway, whether they were in business or not, and by putting some of the extra money they made into a retirement account. So they created $20,000 in tax deductions, and their taxable income went down from 51,700 to 31,700, and now 25% of that would make their taxes $7,925. Now that's 5,000 less than the family who made less money, the same amount on the job, but less total money than this family because they had a home based business and they used the money wisely. Okay. The third scenario was an employee with a home based business. They made the same 75,000, but in this scenario, they were paid $40,000 in commission checks from the business. But they had 20,000 deductions from the business. They invested $20,000 of their money into tax deductible accounts. So that gave them $40,000 in deductions, making the $40,000 that they earned in the business totally tax free. Okay. In other words, they had at the end of the year, after everything, they had 20,000 in their investment account that was tax free. Okay. Plus, they had received the whole 40 in their hand. So now their taxable income ended up being $51,700, the same as the family in example one who earned $75,000 on the job and had no business. Okay, so their taxes at the end of the year was the same, $12,925, just like the family in example one, even though the family in example three earned or received $40,000 more in their hand, of which they put 20,000 into a tax deductible account. Now, folks, that's what I mean when I talk about the tax advantages of a home-based business. So the next time you hear somebody talk about the tax advantages of a home-based business, I hope you understand that they're not saying just sign up in a business, do nothing, and save money on taxes, because that's not what we're talking about. And I hope when you share information with people about the tax advantages of home-based business that you do not infer that, because truly, the more money you make, the bigger your tax advantages, and the more money you have to get you to personal financial success or attain your financial goals faster. That's what it's all about. So let's get out there. Let's drive hard in the business, make income. Let's maximize our tax deductions from the business and from investing into tax deductible retirement accounts of all kinds. And let's maximize our personal financial success so you can enjoy the good life. This is Ivy once again, and I'll see you in the following section.
Awesome, awesome. That was powerful, powerful, powerful income generation advice from the man Ivy Stokes. All right, so I'm gonna get back on with you so I can leave a quick note to you good folks out there watching. Stop sharing my screen. All right, all right. So yeah, that was real powerful stuff. And if you want to know more about this and what he's talking about, on if you're watching on YouTube, the link to my econ will be in the description below. And there's also another link for an event that's coming up in December with Tony Robbins called Date with Destiny. And if you're interested in that and you're building that income and you building that motivation and that fire within you, I definitely implore you to check that out. And I hope that I can be there in December, and I'm going to be working on this every day so I can make that happen. And I hope to see you there too. All right. Once again, this is Doug Omega, and thank you for watching the Builders Club TV. And this is Doug Omega TV on that platform. And this is the Watch, Share, Grow Network. So remember, right here, this is about watching, sharing, and growing. Have a good night, everybody. Remember, watch, share, grow. Grow. This is what I'm talking about.